Well, hello and welcome to this week's update. So, what have we seen this week? Well, CPI coming out with 8.5% inflation figures. That is so far from being accurate, it is ridiculous. The cost of living is much higher than that. If you want to get an accurate representation of inflation, times the CPI by 2 if you're being conservative, or more like 3. That will give you more of an accurate inflation number. Probably closer to 20+% inflation is what we're facing right now. For example, the CPI gives a weighting to shelter of 33%. 33% of CPI is made up of shelter. Now, they just told us that shelter increased 5%, has increased 5% for the last year. Rentals went up 17%, and houses went up between 19 and 20%. So how on earth is shelter up 5%? Doesn't make any sense. So don't really pay a lot of attention to that. But even so, 40-year highs. PPI, Producer Price Index, that was up substantially, and that gets a flow over effect into CPI as well. So some pretty big numbers coming out there, and that is certainly a bit of a concern. They are trying to raise rates when market is facing inflation like it is right now. Tech stocks don't tend to do well, which is why what we're seeing right now is tech stocks selling off as a whole when we look at the sector itself, which is the largest sector in the market as well. So that's something to think about. Now, Friday, which is obviously today, the market is closed. Okay, so the market is having a holiday. It is Good Friday, obviously, and the market is closed, which is why this video is coming out now. So if we have a look here at the opening range, which we set now, because obviously Friday the market is closed, 4460, a move above there on the SPX shows the overall market is in bullish opening range mode. If it's below 4390, it's in bearish opening range mode. So keep an eye on those particular levels. Now, we can see that all the major indexes are actually below their 21 EMAs, which is pretty much a line in the sand between bullish and bearish in the medium term. Okay, so you can see here all below right now. And when we look here at the sectors, we can see the two largest sectors, technology and financials, are both below the 21. So that's showing some weakness there. Energy, which we're in right now, is still respecting the 21 and using that as a support level. Consumer staples are doing well. Healthcare is doing quite nicely. It's pulled back to the 21 and looking now to go back and recapture these highs, quite possibly. And the defensive sector, utilities, is still doing quite well. But overall, more of a bearish feel to the market than anything else. However, we need the next week or so to determine where we are going to go as far as the opening range. Now, some of the positions that we have been in is one of them is Square. So if you have a look here at Square, we had an 8.1% return in 46 days. We agreed to buy the stock at 115 by selling the cash secured put option. It remained above 115. We made an 8.1% return. There is a winning trade right there. Now, another one where we agreed to buy the stock at 75. It remained above 75. We made a 4.1% return. This is another winning trade. Now, we also did an out-of-the-money covered call where we bought the stock, as you can see, for $214.83 and sold the out-of-the-money 220 call. It finished above 220 and we made a 5.7% return. This is all within the same month. Here's another one we did on NEE, an energy stock. We were looking for it to stay above 77.50, but we were happy to own the stock if it did move below 77.50, but it did remain above. Therefore, we kept the money and didn't have to buy the stock. Another winning trade. Here's another winning trade we had on Newmont Mining, where we agreed to buy the stock at 75. It remained above that level, and we made a 4% return in a month without needing to buy the stock. How good is that? Now, we also did this on Tesla as well. So we did a nice trade here on Tesla. Let me just find this. Where's Tesla? Right here, right? So we did it on Tesla as well, where we agreed to buy the stock down at 900. Okay, I've got a real value on Tesla of around $940. So anything below that is good value. That's an intrinsic or real value of that company right now as we speak. So I agreed to buy it down at 900. It remained above that. We made $1,482 US in income in 17 days. another winning trade, right? So we are doing very, very nicely right now, bringing in a lot of income. Now, another trade that we're looking at right now is APPS, a real or intrinsic value of $53.89. It has been moving down, trading just above 37. I'm going to agree to buy this down at 30. Okay, so I want to get a significant discount to where it's trading, significant discount to its real or intrinsic value, and I'm going to agree to buy it down at 30 come for the 20th of May, right? So come that date, 20th of May, 35 days from now, if it's above 30, I keep the money, I don't buy the stock. If it's below 30, I still keep the money, but then I buy the stock, which I wanted to buy anyway because it's very undervalued. It's a great company. It's generating great returns, growing its revenues, growing its earnings, right? So that's what we're looking to do there. Now, another one we're looking at here is NVIDIA. Yes, it has been moving down, but what I'm looking to do with a long-term view is to acquire a good, fundamentally sound stock that's growing its revenues, earnings, and free cash flow at a heavily discounted price. So I've got a real value here of just under 240 right now, all things considered. I have a whole lot of complex calculations I do to work this out, but right now I would be happy to own the stock at 200. For that, I'm going to receive $925 right now, or a 4.6% return for the next 35 days. So if I could acquire NVIDIA at 200, I would be very happy with a real cost of $190.75, particularly when the real or intrinsic value is around 240. So some of the reasons why I like NVIDIA, just have a quick look at it. So you can see here that the return on equity, almost 45%. Anything above 15% is very good. This acts as a governor for the growth rate of the company. Okay, is the company being well managed? Does it have the potential to grow without taking on additional debt? Well, that's what return on equity is telling you. So something almost 45% is fantastic. Quarterly revenue growth, almost 53%, and quarterly earnings growth, over 106%, so very good. A lot more cash, almost or over 21 billion, compared to its total debt of just under 12 billion. Institutions love it. 66% of the stock is owned by institutions, and also insiders have a good amount of as well. So that's a good thing. If we look here at the growth rate, that's what, not the options, the growth rate, that's what drives a company to stock price higher, is when we're looking here, we can see $30.74. That is a very good per annum growth rate. Fantastic, right? Something above 20% is great, but 30 is very good. We look here at the financials here of NVIDIA. Look at the revenue growth here. Look at it from last year to this year. Look at that. That is incredible. And we look here at the free cash flow, the amount of money they have available after paying their obligations, and we look at it now compared to last year. Look at that. That is just incredible. So very good company. If I can get it down at 200, I'm going to be happy. Yes, it's moved down right now, but I'm looking at the fundamentals. I've got a medium to long-term perspective, and I want to generate income through the use of selling options, right? That's what it's about. So there's some things that I'm looking at right now. I'm focusing in on the opening range, which we will certainly be focusing on for this week, because now it's just been set, right? It's a brand new opening range. So we'll be keeping a close eye on that. You should as well, and let's see what's going to happen with this market. We're below the 200. We could very easily start getting below this Ichimoku cloud here and then break to bearish opening range mode and sell off, right? There's a lot of negativity going on there right now. Inflation is creeping up. Are they going to continue to raise rates at a rapid rate? We will see, and the market is poised to have that downside move, so we've got to be prepared for that. But if we can acquire great, fundamentally sound growth stocks in the meantime at incredible prices and generate monthly premiums from owning those, then so be it, right? There's plenty of other ways we do it as well, but that's one of them. So hope you enjoyed that. I'll talk to you guys again next week. My name's Sean Allison. All the best, and bye for now.